spite of a challenging economic environment, equity markets have had a great opening quarter to 2012. Today in the studio I'm joined by Edouard Crestin-Billet, Head of Strategy and CIO of Active Allocation Products at Mirabaud and Company. Edouard, thank you very much for coming into the studio.
Pleasure.
Now, first of all, to start, how exactly can the equity market benefit from a sustained bull market?
Three main factors will continue to support the stock market. The first one is the improvement in the financial conditions. The second one is the low valuation, and the third is the end of the deterioration in terms of earnings.
Now, to expand on one of the factors you just mentioned there, why are valuations remaining so low?
Well, it's a good question. Valuations are low for two main reasons. At first, in terms of price earnings, and secondly, in terms of earnings sales. The multiples are very low, particularly in terms of adjusted earnings. And if you look at the price to book, the price to book is also very, very low. And the dividend yield are quite high compared to the yield that you can obtain on the bond market. In terms of earnings, if you look at the trend, the medium long-term trend in earnings, the earnings are still lower of the trend.
Now, if we talk about regulatory change, we talk about the reduced global growth and equity volatility. Some analysts think that the golden age for shares is coming to an end. Does this mean that the focus is on valuations? Because of course, future returns in equities depends heavily on valuations.
Return on equities are influenced by three main factors. The first one is earnings. The second one are the price earnings and the valuation. It's true that in terms of earnings, the earnings will be lower than in the past. The gross earnings will be lower in the past because the world economy will be slower at medium long term. And I think it's important. It means that we should have reduced earnings growth at medium long term between 5 and 10%. The other point is in terms of price earnings. The price earnings will stay lower in the couple of the years because the return on equity for the major world company will be reduced. And the evaluation model should be able to integrate the new environment. And the new environment is characterized by lower earnings long term and by lower price earnings because we have lower return on equity. And it's true that the price to book, for example, the price to book will be lower compared to the historical data.
Now, as you mentioned earlier, Edward, the prospect for future returns in equities relative to bonds are looking extremely hopeful. Now, we have an equity risk premium. Yields are higher than bonds, but the question is, equities may remain cheap against bonds, but are they cheap enough at the moment?
Yes, they are cheap enough, but with one condition. The condition is to get a normalization in terms of a systematic risk. If we have a systematic risk lower, it means that the price earning should continue to get higher.
Now, in terms of earning estimates, are you factoring in a slowdown or a global recession?
I don't forecast any significant slowdown. We should have in United States a sustainable economic growth between 2.5 and 3. It's true that in Europe, particularly on the Eurozone, we will have a recession for the next 2 quarters. But thereafter, we should get a normalization. In the same time, the growth in the emerging market will continue. It's true that at the present time we have a big question mark on the China economy.
Of course.
But we think it should be temporary. It means that we will have more relaxed monetary policy in China, and thereafter, it means for the second part of the year, we should have higher growth in China.
So in that case, Edouard, what is your outlook for equity markets for the remainder of 2012 and as we go into 2013? What future trends are there as well for the equity market?
I think the stock market should continue the uptrend, and particularly for the Japanese market, particularly for the emerging market, and thereafter for the European stock market.
Edouard, thank you very much for coming into the studio.
Thank you for your invitation.
So there we have it, Edouard Crestin-Billet from Mirabaud and Company on the equity market. Now we'll have more exclusive interviews just like this one on Dukascopy TV, but for now, goodbye.